Is to you by Guerrilla Technology, proactive and strategic IT.
Hey folks, greetings and welcome along to the New Zealand Tech Podcast. I'm your host, Paul Spain. Today, two fantastic guests. We have Janine Grainger. Welcome, Janine. How are you?
Hey, Paul. Great to be back on the show. Thanks for having me.
Yeah, it's great. And for the first time, Jamil Geor. Great to have you joining us as well.
Hey, Paul. Thanks for having me.
Janine, for those who haven't met you before, maybe just a short intro where you fit into this big wide world of tech.
Sure thing. So I'm the co-founder and CEO of Easy Crypto. So we're New Zealand's leading cryptocurrency platform. I'm also an executive council member of FinTech NZ, so part of the broader New Zealand tech ecosystem with that role as well.
Great. And Jamil?
I'm the Chief Technology Officer for Easy Crypto, and I manage everything technology at Easy Crypto.
Fantastic. Well, great to have you both here. It has been a while since we've really caught up and delved into what's happening in the sort of crypto and blockchain world. So always appreciate these chats. And there's been a lot going on from a New Zealand perspective, and you both deeply involved in that. Lots of awards coming, especially for you, Janine, this year. It's like every time I turn around, it's, Janine's won another award somewhere on the global stage or locally. And
I'm going to need to extend my house just to hold them all.
It's pretty exciting. So congratulations.
Thank you.
And also a big thank you to our show partners, of course, to 1NZ, 2 Degrees, Spark, HP, and Guerrilla Technology for their support of the New Zealand Tech Podcast and, of course, the broader sort of tech and innovation ecosystems here in New Zealand. To get started, I guess it'd be good to just a sort of a quick intro on the Easy Crypto sort of story in terms of where you fit in and your role in New Zealand, without giving sort of delving in too much to the new things, because we'll get to those as well. And then I'm kind of keen to sort of delve into what is happening in the broader world of crypto and blockchain, because we've seen some interesting things with the FTX collapse and other things that sort of take the headlines. But I think there's a fair bit to sort of delve into of positive things as well as some of those challenges as well.
Sure.
Yeah.
Well, the very quick backstory to Easy Crypto was we started in 2017. At that stage, similar to now, actually, there was a little bit of a bull run happening in crypto. Everyone was talking about Bitcoin and blockchain and what are these things. And my brother Alan, who's my co-founder, and I realised that there wasn't an easy way for New Zealanders to get involved in crypto markets. There was, a couple of complicated routes, a lot of having to send money overseas, a lot of uncertainty about who you were dealing with and how it all worked. So we sought to make a really simple, easy, safe way for Kiwis to get involved in the crypto markets. And one of the things that set us apart from a lot of other players is that we are what you call non-custodial, which is that we don't hold customer funds. So we enable you to buy and sell, but we didn't store the funds on your behalf. And when you mention FTX, that's a really big and recent example of the dangers of custodial providers, where if you're trusting someone else to hold your money for you, you really need to know that they are actually worthy of that trust, and preferably there'll be a good tight regulatory net around that to ensure that there are checks and balances. But too often we've seen that that's not the case. And so being a non-custodial was important to us, so we created a way for people to buy and sell crypto really easily. We became the largest player in the New Zealand market within our first year, and since then we've grown both within New Zealand and internationally with that sort of core product, and then a few new products, which I guess we'll come to shortly.
And in terms of your background, before founding Easy Crypto, tell us a little bit about what you did and what put you in a sort of a good position to to understand this world and I guess its connection with the broader fintech world.
Yeah, I mean, it was a bit of an accident almost. I personally got involved in cryptocurrency around 2014, and just I learned about it on some forum somewhere and was just like, oh, this sounds interesting. And as I had a background in economics and finance, I thought it was worth learning more about. And then when the 2017 bull run happened, at that stage I was actually working at a bank, and because I had crypto, everyone thought I knew things about crypto, so I'd get asked all of the questions, which I then had to go away and research the answers to. So it really sort of helped me become a crypto expert, because I was needing to be that for the people around me. And then when Alan and I set this business up, my previous career history, I'd been in everything from government through to management consulting to strategy, banking, and a lot of the different threads of what I'd done across my career actually came in really handy for being the CEO of a fintech startup, which wasn't something I'd expected to take as a career path.
Yeah, good. And Jamil, what did you do before joining Easy Crypto?
So I've been running a consultancy for about 13 years.
Okay.
And I sort of met Janine through a sort of mutual friend who was working for Easy Crypto at the time. And she kind of roped me in, and it just sort of naturally, turned into what it is today, where I'm sort of leading the tech teams. And we've had a really big year, a lot of big projects on. And it's been a huge learning experience for me personally. Yeah.
Yeah, I think it's really, really exciting because you're 50 odd sort of people at the moment, and it sounds like you've all been very, very busy this year.
We have. Jamil only joined us, I think, it would have been around this time last year.
Yeah, that's right.
He came on to just do a consulting project, and then we gradually roped him in. But
Okay. Well, let's sort of step back, and I am keen to sort of delve into some of the challenges I guess the crypto world has had, and I get roped into from time to time a TV interview or whatnot on some of the things that have gone on, and I'm certainly not as anywhere near as deep into it as you guys are, but I tend to encourage really this approach that there's a benefit for all of us to be looking ahead where things are going and where they might go, and part of that is also getting our feet wet a little bit and actually trialing out the technology. So certainly dabbled in various aspects, and setting up wallets and buying small quantities of crypto to get some exposure. But I think for a lot of us, we probably see the headlines and you kind of wonder, like, okay, is crypto good or bad? It sometimes kind of gets down to a sort of as simple as that, right? And in many ways, that's a question like, is technology good or bad? Is social media good or bad? And of course, anything can be leveraged in really good ways. Can be used in bad ways, and then you can get the bad actors that come in. And I guess when I look at my own work, sort of working with small to medium businesses, especially around technology, for me it's really simple. There's sort of two sides to what we do with them. On one side, it's how do you maximize the leverage that an organization can get from the best of technology, and on the other side, how do you drive down the risks? And I think to me, in the world of crypto, it's kind of similar, right? You want to take advantage of the good aspects of the technology, but you don't want to be someone that's getting burnt by a bad actor or a poorly structured business. And when we look at, say, the FTX collapse, Cryptopia here in New Zealand as well, those are the examples of ones that haven't ended up very well, and in some cases that leads to sort of criminal charges depending on where in the world these things happen and so on. Other cases it's like, that didn't go so well. You could have thought ahead a little bit better. How do you tend to think about these things and the challenges that I guess kind of in a lot of ways they sort of tarnish the whole thought of whether cryptocurrency is something that people should consider as relevant to them?
Yeah, I mean, I think your framing at the start, Paul, was great. Is it, is technology good or bad? Yes, and the same with everything. Like, everything can be used for good or for bad. And with crypto, I actually sort of tend to look at it from a bigger perspective around cryptocurrency is just one type of digital asset. And I'm a very, very big believer that our world is increasingly digitizing. Like, we see it in, how we use information. We see it in our workplaces. If you think back to what your job looked like 10, 20 years ago, compared to how it looks now and how much, the digitization of information has changed the way that we work, that's huge, right? And that same big transition, I think, is coming for assets. So cryptocurrency is just this very first baby step into what digital assets mean and how we can use them. It is both good and bad, like mostly misunderstood, to be honest. But like you said, it's also really useful, I think, for people to try it, even if you don't want to put your life savings into crypto. It's unfortunately too much of it is just around speculation rather than around real world use cases. But the real world use cases are building, and they're going to be building beyond just crypto. They're going to be building into tokenization of real world assets, into things like digital identity, into broader use cases for programmable money. And so all of these things are really interesting. And if we want to be able to harness the good, we need to understand it. And so start with crypto because it's our first foray into a digital asset and learn how it works. But there's got to be so much more than just crypto in the coming years.
And if you look at the challenges that we've seen in terms of, say, FTX and so on, is that due? Is it largely due to sort of that we're early on? There's a lack of regulation. Is it that we easily sort of put trust in those who get attention and get traction? And what's been your approach in terms of Easy Crypto? Because sort of the background that you've come from and from my following of Easy Crypto, it's like, oh, this seems like how you should build a business in this space. There's different things that I look for, and it's like, oh, okay, you're definitely operating in a different manner when we look at those that have stumbled, if we wanted to put politely what's gone wrong in some firms.
Yeah, I mean, for us, like compliance first and, really strong focus on keeping our customers safe and on adhering to regulation has been like an absolute non-negotiable from day one. And a lot of this came from, my background and, having worked in banking, I understood that there were things like anti-money laundering laws and sort of, financial market conduct, things that you had to comply with. And so we baked that in from day one when we started building Easy Crypto. We built with regulations in mind. We didn't have to retrofit afterwards. And I think, for me, it's very frustrating that, you raise the point of, is it just that, there's this confidence, kind of thing. And as someone who, I had raised funds for the business, it took me a year to try to raise funds. It was a really hard, long slog. And then someone like SBF, the founder of FTX, apparently just got like literally millions of dollars while he was gaming and not even paying attention to the pitch. Like, I think we have this tendency as humans to, to follow the crowd and to go, well, that thing looks successful, so therefore it must be successful, so therefore I'm going to pile in. And actually looking at the fundamentals in, is this a solid business? Does it have solid, financial fundamentals? Does it have compliance fundamentals? Like, with the FTX debacle in particular, there was such a big question for me around where were the VCs when it came to due diligence? Like, you had big, massive, high-profile VCs putting their money into this company and lots of other smaller VCs piling on after.
And these are venture capitalists with like billions that they've invested in different directions.
And massive teams for doing things like due diligence. And yet this was a company that did not even have a board. Like, how do you invest in a company that has no governance? I think they didn't have a CFO, no audits, none of that. Like, it was all just a sham, and yet people, it felt very much like Emperor's New Clothes,
Yeah, you would kind of think these firms, would have a process that they have to go through for their own internal stuff, even if there are, key people that will make quick decisions sometimes, that there's at least some I think layers to go through other than just looking and going, oh, those guys did it, so it must be okay. And it is interesting. I often hear that when I'm talking to a firm about a bit of software, a bit of technology and so on, they're like, oh, the other guys down the street, they went with that platform and they're in a similar sector to us, so it must be fine. And it's like, well, probably is, but actually there's there are some questions that that we ask when we're maybe going through a software selection process, or when you're varying other things that we do. It's kind of blows your mind to to think that those things just seem to have been left by the wayside.
But for the everyday person like you and I as well, I guess the practical lesson there is around not just jumping in on something just because everyone else is, right? And that was the time that FTX was invested in was very much the big bull run. Like everyone was just piling into crypto, and it looks like we're starting another bull run now. And there's that, same risk, I guess, for all of us to be mindful of don't jump in on something just because everyone else is doing it, right? Like check the fundamentals, think about what it is, particularly with new tokens that are coming out. You've got your kind of blue chip crypto stocks like your Bitcoin and Ethereum, but then as soon as we get into this kind of market, so many other projects pop up, and you need to be mindful of, has it got actually core fundamentals, or has it just got a lot of hype?
Yeah, and then let's sort of talk about crypto custody. Can you explain how, say, FTX operated, Cryptopia, and how that is different to how Easy Crypto operates, and there is a mix of firms out there in terms of their offerings and approaches, isn't there?
Yeah, that's right. So with an exchange, which is what FTX was, Cryptopia, Binance, many of the big players globally are exchanges, which is you transfer your money into the exchange, so they're holding your money, then you can swap it into different types of crypto assets. During all of this time, it's sitting within their control and their custody. And then when you want to, you can withdraw it out to your own wallet. Easy Crypto does that whole process end to end in one go. So there isn't a point where we're sitting holding your funds. So you pay some money, we turn it into the crypto you want, and we send it out to your wallet. And that's all one step, rather than it being 3 separate steps of topping up, trading, and withdrawing. So where most people get stuck is they leave their funds in that trading space where it's held in the custody of the other party, rather than bringing it out to their own wallet. And a reason for that is that many people don't have their own wallet. So that was something, we thought we'd try to help solve as well, making that a simpler thing for people to do.
Yeah, and that's certainly been, I guess where we've heard, over the years of, people having their own custody, which, is sometimes referred to like being your own bank. Well, that's had some challenges with it, and probably the biggest one that's caught the attention was it someone going through a dump in the rubbish tip somewhere? Was it UK or something?
I think so. Someone had thrown out millions of Bitcoin on a hard drive, which was worth insane amounts.
Yeah,
I don't know if they ever found it.
Yeah. So you hear these different stories. And there is something to be said for the simplicity of your money's in a bank, and I lost my FPOS card, credit card, whatever, and you've got someone you can go and see, and they're like, let's just prove you're the who you say you are, and you're away, right? So being your own bank, there's some challenges to that as well. Yeah. So maybe it is a good time to sort of delve into the wallet that you've developed and how that is probably different from what people might have been used to in the past. How that makes life easier, maybe minimises that chance that you're going to be trying to resurrect an old hard drive, or probably these days it's not so much a hard drive, but a dead phone or what have you.
Yeah, totally. So when we started the project, we actually had a seed phrase wallet, like most people have, and that's what we developed on the phone. But soon after, we developed sort of a threat.
Oh, and the seed phrase, for those that aren't familiar, this is a pretty long phrase,
that's
right? It's not something you're going to remember in your head unless you've got a much better memory than me.
Yeah, so typically it's like 12 words or 24 words, and you're expected to write this down on a piece of paper maybe and hide it somewhere inside of your house, or maybe, I don't know, bury it in the backyard. And then hopefully one day you'll remember where you put that piece of paper, and you'll dig it out and you'll withdraw those funds. And, that's the story behind, those typical seed phrase wallets. The other problem with these wallets is, they'll import them into, say, a mobile app, and they'll sit there fully formed. And this is a big security risk because they sit there, on a device which may not be secure, and we often see this happen is that a person's phone will get compromised and their seed phrase will get taken off of that device, and they'll lose all of their funds. So what we wanted to do was secure users against those kind of attacks. So what we went for is a multi-party computational wallet, which is basically what that means is there's two parties involved in the signing of transactions. One is you as the user, and the other one is us as the secondary signer. So when you go to transfer funds out of your wallet, there's a process which happens where we both sign the transaction, and that's when the funds are transferred. So there's that extra layer of protection there too. And what else we've developed on top of that is this is an idea of Janine's with social recovery mechanism, which allows us to shard or share your key amongst your family or friends, like a trusted circle.
Yep.
So if you lose your wallet in the future, you can call on those people to help you restore.
And that's
the
just
wallet.
all built in. Because I think
Yeah, yeah.
that's, I don't know how common it is, but it's certainly one of the approaches today, right, is you can, and often, it's probably impacted by the, yes, I should do that, but then you get busy, lazy, whatever. And I've interacted with people that have, maybe they've got a significant kind of level of holdings in crypto, and they've taken these sort of different approaches. If somebody's got a little bit here and they're safe, and someone else has got another safe.
That's the thing is people were doing it sort of,
but really complicated. And probably if you work out how consistently people are doing it and so on, that's probably pretty low. So the idea of actually building that into your wallet sounds to me like a good approach, presuming
totally.
it works and it works well. So what do those other parties have to have? Do they have to install your wallet as well? Is that what you would do?
Yeah, that's right.
Yep.
So your friends and family would have to download the wallet as well.
Yep.
And they essentially hold a part of your key.
Yep.
They don't have a fully, the full key on their device. It's just
Yep.
part of the key. And when it comes to recovery, we call upon, say, three family, and they return, or maybe only two of them will return their shares of the key, and then we can recover the full key from those two shares.
Yep.
Yep.
Yeah, that sounds like some good peace of mind.
And it was interesting actually because we'd been working on this and building it all year, and sort of I think the month before we launched, Apple came out with social recovery for your, backup your Apple, your iCloud, that sort of thing. And I was like, that was a really interesting validation. I thought that for me, particularly as we're moving into a world with more AI-enabled scams and more phishing and stuff, to be able to, one of the strongest ways that you can protect yourself is with people that, you actually have face-to-face real relationships with.
Yeah.
And that's possibly more secure than, in quantum computing, all that kind of stuff, all those things that will help, that might undermine some of our existing security methods. Nothing's going to beat the security of a relationship and of a face-to-face connection.
Yeah, yeah. And as part of that, do you, does the app sort of encourage like making sure you talk to that person and so on? Because, with the online scams and so on, people can get scammed quite easily. You get quite, trusting, right? Of like, oh, I've got this, that looks like that's from Paul. Yeah, he must have lost his thing. He sent me this electronic message. So, I better approve that. You get that around a circle of, people that are, I don't know, not at their sharpest at a given moment. And, things can go the wrong way, right?
Yeah, and this is one of the things that I think, we can constantly be improving and building this over time. And as different waves of phishing and scams come through, we can be, improving our processes for the recovery people of, like the most basic one would be, are you face-to-face with Paul right now? And if you are, we can probably assume that's pretty safe, but maybe in future there's other checks that we'd want to put on, or, is it really Paul or is it a hologram? Like, whatever we need to protect against in the future, we can always be updating and improving the security. And it's also a really useful way to coach people through what types of things to look out for and to help people step back when you've got these deep fakes now where people can get phone calls from their kids saying, Mum, Dad, I've been held for ransom. And like that immediately floods people with all of this like adrenaline, and to help them to actually step back and go, okay, wait, check this. Have you called them on a different number? And help people think through best practices for security as well.
Yeah, those scenarios, and we'll keep getting new ones, right? Which is part of the challenge. But when you get put into a pressured situation, then things can fall apart, and you can't be trained and prepared for every sort of crazy eventuality that scammers will come up with, I guess.
Totally. And I think with traditional sort of crypto wallets is that once you've been scammed out of that money, it's gone, in an instant. Whereas with banking, there's other controls and things that they can put in place to protect your money.
Yeah.
Where with crypto, it's a very instant thing. So that's why we've put a lot of focus on the security and, building out this MPC technology. Yeah.
Now, if we actually look at the sort of banking field, not just in New Zealand, but internationally. But if I think of in New Zealand, it used to be when somebody was scammed in New Zealand that you could just, it's fine. The bank's going to sort it out and we're going to get our funds back. And, I've been in these situations where we've been called and asked to, help someone that's been in one of these scenarios. And, I remember one case, it was north of 100K that had disappeared. They signed they ended up signing an agreement after we've been working with them with their bank confidentiality, so they didn't, they weren't able to kind of, say too much. But the scenario was they got all their money back, and we don't, I'm not sure that the bank actually was able to recover it, but they were made good. But that's changing in the banking world now, right? Where people can go through and get scammed, and the bank are like, no, sorry, that was kind of your fault. So the kind of level of trust that we've put in, I guess that sort of the shared responsibility between banks and ourselves, that's starting to erode, isn't it? So it's kind of interesting that trust is kind of coming up. I would say with this sort of approach to to a crypto wallet, whilst on the side we're kind of seeing the trust in banks actually drop off, and of course banks also they have custody of your funds, so if they hit the wall, there's an aspect there where people can lose money. Fortunately, that hasn't been a scenario we've kind of seen in New Zealand, I guess, other than where money's, say, in a finance company or something that's hit the wall. And, there have been people that have lost significantly on that front. So
I think technology has a place to play there. I think this goodwill that the banks had is sort of eroding, and we can't rely on that anymore. So we have to build these systems that can operate at scale to sort of prevent this kind of fraud. And I think the banks will be looking at this kind of technology as well, I'm assuming.
I mean, one of the advantages we do have over the banks on this is that we have a much newer tech stack and we're much more nimble with it. Like the bank that I'm with, and I won't name names, but I don't have the ability to put 2FA on my accounts. It scares the bejesus out of me. But it just is not something they technologically can offer me. And unfortunately, my mortgages are sticky and whatnot. But whereas with us, we can, one of the things that's great with MPC is that as opposed to having that, seed phrase that Jamil talked about.
Just remind us, MPC stands for?
Multi-party computation.
Okay,
so the way we're building our wallet with those two parties both signing a transaction or both enabling activity to be taken on the wallet, that means that you can layer in all sorts of protections. You can put in 2FA, so second factor authentication. You can put in lots of them. You can have time delays, lockouts, all sorts of things, very customizable. Whereas if you just have that core seed phrase, like anyone who has access to that has everything. You can't put any protections around that. Yeah. So I'm a very firm believer that, that core seed phrase thing, that was version 1 of cryptocurrency, version 1 of digital assets, but we're moving past that into a world that is safer and has better customizable security. And in that, like I said at the start, we can be really nimble. We've got a really new tech stack. We can build stuff out really quickly. We can also do things like, we can look at the addresses customers are sending to and give them information about where they're sending. Like, did you realize you're sending to an address that, 20 people around the world have, stated that this is a scam in the last 24 hours? Like that kind of real-time, very, very strong feedback to help people stay safe, I think is a real benefit of the new tech.
Yeah. certainly good to see the banks are slowly moving forward. So we're going to get account number kind of matching with an account name is on its way. But boy, these things can take a really long time. So yeah. All right. So what else have you been working on? So there's a bit of a local story here.
Yeah, that's right. So just to take a step back around, for anyone who's familiar with cryptocurrencies, they'll probably be thinking of, massive volatility. Bitcoin, case in point, up 70% in the last 6 months, and I think 10% in the last week or two alone. Like, prices are doing this in crypto all the time. And while we talk about all of these great use cases for cryptocurrency, international remittances, all of these, different ways that money can be made more efficient with blockchain, it doesn't work with all this massive volatility. So the crypto industry has come up with a thing called stablecoins, which is all of the benefits of blockchain-based currency, instant, 24/7, real-time, geographically available, peer-to-peer, but without that volatility because it's pegged or backed with an underlying asset. So these have been around for a couple of years in crypto, mostly US dollar based, but we've seen a move towards more regional stablecoins to help different, use cases in different economies. And we're very proud to have brought out NZDD, which is a digital stablecoin for New Zealand. So it's, for me, I'm super excited about this because, again, as I said before, I think we're seeing increasing digitization of assets. And as part of that, stablecoins are an absolute infrastructure layer. Like, if you're wanting to do, say, settlement of a house, sale and purchase for a house, and you want to have that all settling online, instant, real time, you'd need a New Zealand dollar stablecoin for that. If you want to do real time payments, micro payments, streaming payments, like there's all sorts of different things you can do using that as a base layer.
Yep. And so in the sort of shorter term, and there's probably a little bit more here to delve into, but in the shorter term, what would you see would be the use cases? Are there, many situations today where you would see, people wanting to, have NZDD as part of, how they store funds?
So we've got sort of three main use cases today. One is crypto traders, so people who are already using cryptocurrency. If you want to lock in some gains or maybe avoid what you think might be a downward price action, you want to move into a stable currency. Previously, USD-based currencies have been the only one available. Right. So now you can move into a New Zealand-based currency, which has two benefits. One is that you don't have the exposure to the foreign exchange risk with the US dollar as well. And secondly, it's so much more efficient and easy from a tax perspective because your New Zealand dollar stablecoin will not have taxable gain or loss against the New Zealand dollar. It's just one for one. Whereas if you go into US dollar stablecoin, you've got that secondary tax complication. So crypto traders is one, and that's probably the most obvious straight off the bat use case.
What about if you're into, trading currencies? Is this something that we're kind of seeing where instead of, the margins and stuff on moving around between currencies. How does that sort of compare with using stable coins to do the same sort of thing?
That's a really fascinating question. We haven't had anyone ask this yet, but I think is a really obvious case here of cryptocurrencies. So there is a New Zealand, there is an NZDD USDC liquidity pool, which is it's an online pool where you have both of those assets and they trade against each other. And so anyone can put funds in and buy or sell at whatever price the pool is trading at. So if you are a currency trader trading against the US dollars at the moment, you currently have trading hours, which are sort of Monday to Friday, and it goes around till midday Saturday our time, and it starts mid-morning on a Monday. Outside of those hours, there's not a lot of ability to trade. The markets have much bigger spreads, and to be able to trade 24/7, there could be some quite good arbitrage opportunities because the dollars in the crypto versions of those real world assets will always trade back one-to-one with the real world assets, but they have a 24/7 instant trading pool, which you can't get on the real world assets. So definitely could be some interesting opportunities there. Come talk to us if you want to arbitrage on the stable coins.
Yeah, when I've got billions of dollars to throw around. But no, these are sorts of things, I think, people will take their interests, and it doesn't always have to be sort of, big amounts of funds. And I'm also kind of, curious around whether there's even I don't know, some probably with other sorts of assets, how you might do something similar, like even shares and varying sort of funds and so on, whether you end up with kind of a crypto type equivalent there that you could trade around with. But anyway, there's always future things coming down, isn't there?
So that was first use case. I should quickly do on the other two. So first one was crypto traders. Secondly, there's actually ability, and I think this is probably most relevant for Web3 and blockchain companies, that you can actually use NZDD instead of having a bank account. So you can get paid by people in NZDD, you can pay others, you can do, and we're constantly working on increasing the sort of like the real world use cases, but all of the things that you can do with New Zealand dollars, you can do with NZDD as well.
So how would you get paid by somebody from their bank account to NZDD? How would that work?
So this is something that we're working on at the moment as to how we make this clearer and easier for people to engage with, and we'll be putting some comms up in the new year around it. But if you have an account with Easy Crypto, you can receive payment in New Zealand dollars and have it automatically converted to NZDD and sent out to your nominated address. So the rails exist there. It's very easy to do, but it's just a matter of making it simpler for people and also for us to improve our processes for, say, if you want to receive your payroll or you want to receive payments from, invoices for work that you've done as a company, that kind of thing. So.
Oh, that is fascinating. Okay, so you could basically give your employer a bank account number that lands with Easy Crypto and gets converted.
Exactly, yeah. We've actually been working with a payroll provider to be natively integrated into their system as well, just to make that, even smoother. But yeah, anyone could do it through that method at the moment. And the last one, which is the one that I think is pretty exciting, is probably a much longer term play. But the last use case for NZDD is for people who are building fintech or financial products or services and want to be able to have access to a real-time 24/7 programmable version of the New Zealand dollar. And I'm like, what can we do with programmable money? I don't know, but I think there's some smart people out there that probably will come up with some very cool ideas.
Yeah, okay. Is that something you spend a bit of time thinking about, Jamil, on the techie sort of side of how you might program money?
Yeah, totally. I mean, the team's always coming up with ideas and things. It's kind of hard to know where Easy Crypto should sort of start and stop, building on top of NZDD. It's really fascinating. I think that's the one thing with crypto, is that it moves so fast and it's so easy to build these things on top of the underlying technologies that's there. So I think this is going to open a lot of doors for a lot of people. I mean, even out of the gate, with the wallet, you can do peer-to-peer payments with NZDD now. And that's really, really basic use case.
And what are the transactional costs? Because there's always some sort of cost in there to, when you're working with blockchain for transactions. How does that side of it look?
It's a really good question, and there's different blockchains that NZDD is available on. Okay. So on Ethereum, which is, the most commonly used, the most well-known of the, post-Bitcoin blockchains, the transaction fees there at the moment are really high, like around $20 for your normal transaction, which is like, we're talking banking costs here. That's not cool. But we've also minted or created NZDD on a whole range of other blockchains. So one of the ones that's quite popular is Matic. Our friends at PIN, we were talking offline before about Pay It Now. They have a great wallet that has a Visa card linked into it that you can spend, and they're building on the Matic network. And we've also got Optimism, Arbitrum, Base, like BSC, all of these different networks, which some of them have just, fractions of a cent of transaction costs. And there's always a lot of innovations and improvements in the blockchain space. So
that's cool. Now, Pay It Now. Their name came up while I was in Christchurch a few weeks ago, and I think they're based there. Their situation seems pretty interesting. That they basically, you can have a debit card that is basically linked to your crypto wallet.
Yeah, it's a fantastic use case, and it's one of these. bridges between the crypto world and the traditional finance world. And so you've got a crypto wallet, you've got a Visa card linked to it, and if you go and say spend at a merchant, the merchant receives New Zealand dollars. They don't see it looking any different from any other Visa transaction, but for you, it's coming off against your crypto balances. And I think there's some really cool use cases on this. I mean, again, if you want to just live on blockchain, don't want to have a bank account, that kind of bridge really helps. But there's also other things like, one of the things that we'd love to be adding into the wallet next year is a product called staking, which is a way to earn passive income on your crypto holdings. So, imagine that you can earn some extra money on your crypto holdings and then funnel that money to your credit card and, use that credit card at the pub, and you're effectively getting free beers because it's just come off your crypto gains.
That approach, I've got to say, always sort of scared me because it's like, hold on, somebody else has obviously got your crypto in order to do that, right? They've got
to do the credit card part of it or the staking?
No, to be able, for the staking part. So if you're going to earn a kind of interest or however that looks, then there's that level of trust required. And I think there's already been a scenario with that. I think this was something I was talking with Darcy about where. If I remember correctly, that he had some money that was in where he was earning some interest, and whoever it was fell over. And so, I think if you're gonna go down that track, you've got to be very picky, I guess, around who that is, and whether they're stable, I suppose. And that I guess comes back.
Us, we definitely do our due diligence.
And
this, I guess, is around giving people that information and that choice around there are ways that you can do your staking yourself. That is probably extra for experts for most people. And then so if you're going to start using third party providers, how much of the control of your funds do you want to give up, and how well do you vet and check who you're doing that with? But there are some really good providers out there. And Jamil, I don't know if you want to talk to our current investigations in that area at all? Or?
It's still early stages, and I think it's like any other sort of financial investment. You've got to question where the yield's coming from, and if you see in some of these staking products are very high yields, and you've got to question how they're able to make those gains. But there's these other very reputable ways of doing, staking, where you're essentially funding infrastructure for the blockchain, which is, a really legitimate investment, for this kind of, staking product.
And very transparent as well. Like you can actually see those returns on the blockchain. It's not, that comment of checking where the yield comes from is a really good one. I learned that lesson during the last bull run, and I love the quote of, if you don't know where the yield is coming from, you are the yield. I think it's a really good one to keep in mind. Like it should make sense. You should be able to understand what the returns are, and if you don't understand the returns, probably don't get involved.
Yep. And for those who are listening, and I mentioned Darcy before, and you're not familiar with Darcy, Darcy Ungaro from NZ Everyday Investor. So, and you want to delve into more of these topics, including a chat with you recently, Janine, then go and have a look for NZ Everyday Investor, and you can get an investment advisor's professional thoughts and discussions and so on these topics, and obviously a whole lot more on that front. I'm just trying to think what else. So probably the other bit, and this comes back to me being risk averse, is when it comes to sort of stable coins that are pegged to a currency or anything else. How we've seen. I think we've seen some scenarios in the past where that maybe hasn't worked out so well. So. Why would people have confidence that NZDD is going to be good?
Yeah, great question. Like? And we have the motto for crypto as a whole, I think, is don't trust, verify. And so it's a really good point. Like, don't take our word for it. With NZDD, every single NZDD on the blockchain will be backed with a real New Zealand dollar in a bank account. And how much is on the blockchain is very easily for anyone to see. Like it's public, it's visible, anyone can see how much is in circulation. And then we have engaged EY as our audit partner to do quarterly, I think, attestation reports for them to go, yep, what is on the blockchain has been and consistently is matched with what is in the bank account. We'll make those reports public. We don't have the first one yet because we've only just kicked off. But it's a really important point. Like people need to not just trust what we're saying, but actually be able to verify for themselves that it's true.
Yeah. Is that something over time? I mean, I'm just sort of, thinking when stuff happens, sometimes it can, you might think, oh, yeah, they're trustworthy and something changes. Is that something where over time, rather than that be sort of a quarterly report that takes some time where you've got like such a level of transparency that you can see at any given time, like this is what's on the blockchain, this is what's, held into trust, like on a, almost a real-time type, basis? Or am I dreaming? Is that too complicated to achieve?
I mean, if the banking sector had APIs that we could disclose via the APIs, the value of our bank balances, we would do that. But perhaps we could possibly write our own, like have a page on the website that is like our current bank balance is this, and just have that scraping the data out of our banking. But when APIs become available, I think that would be a lot easier to do. But perhaps it's something we can
come on, banking sector, time to step up, New Zealand banking sector.
Maybe we could do powered by a Kahu or something, have that little transparency on that. That could be cool.
Yeah,
we'll look into it.
Yeah. So, hey, that's great. Well, I think we've kind of covered most of the bases. Was there anything else kind of jumping out you think listeners would be curious about? That's we've definitely delved in, very much into sort of crypto side and not too much broader on blockchain today. But anything else that we, that's kind of current topically that's you think relevant? We've had a good coverage.
Just thinking about mentioning about, for the builders, the program we've got in place for that.
That's true. Yeah, we've got going back to NZDD. If anyone is building something that could use NZDD in your platform and your whatever product service you're building, we do have some grants available. So we've partnered with Web3 and Callaghan on that. So come hit us up if you have some ideas or want to talk more about potential grants. And I guess just more broadly, I mean, we've only just scratched the surface on so much of this stuff. If you have questions, our team is always happy to help and reach out to us on social media or via our help desk and come have a chat. And yeah, it's a crazy new world, but like we said at the outset, it's awesome just to dip your toe in and learn how it works. And I don't think you'll regret just learning the basis of this industry because there's a lot of potential for it to really be impactful in the future. Yeah,
it's great. It's really, really good to have an up-to-date view on where things are at, and I think encouraging to see how well Easy Crypto is going, and that you've been able to really do some good innovative things and launch them recently because I think we kind of look at that bigger picture. We want New Zealand to be at the forefront innovation wise and not at the other end. This is good for us as a country as a whole to be innovating, and I'm very encouraged. So keep up the good work, and we'll definitely be looking forward to getting some some further updates down the track. So keep in touch.
Thanks very much, Paul. Great to be on.
Good. All right.
Thanks, Paul.
All right. Well, thanks very much, and thanks everybody for listening in. Of course, if you're listening to the audio, make sure you're also following us on whatever platforms that you catch video on. Most weeks, and it probably varies a bit, especially over sort of holiday seasons and the like. But most weeks there tends to be a live stream on a Tuesday afternoon, which you can find on YouTube. Following me directly on LinkedIn, also on Facebook and X. And of course, if you've been watching the video, then go and find your favorite audio app, such as whether it's the Apple podcast player or Spotify, which seems to keep growing in terms of its podcast listenership, and follow us on those platforms. And of course, big thank you to our show partners, Gorilla Technology, HP Spark, 2 Degrees, and 1NZ. And thank you both for joining me.
The New Zealand Tech Podcast, brought to you by Gorilla Technology, proactive and strategic IT.